Well, good afternoon there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you this Tuesday afternoon market recap. Obviously, today the Dow Jones Industrial Average was down intraday about 210 points. It closed, however, down 180 points, somewhat of a bearish trading session, which has really negated the 120 point gains which we saw to begin the week, that inside day Harami type of candle on the Monday. This has been the first recording which I have done since Thursday or late Thursday last week in a post-mortem of the FOMC announcement, in that they were not going to raise interest rates. What I made very, very clear on that Thursday afternoon was the fact that in terms of technical analysis, we were setting up so many key indications that this market was set to roll over, given the type of shooting star candlestick which we saw build up intraday. We saw that intraday rally fade and fizzle towards the end of Thursday's trading session. We also saw the back test of not only a false break above the 20 exponential moving average, but also the first real touch of the 50, which we've really seen since late July 2015. Not only on top of that, but we also had horizontal resistance and somewhat potentially of a back test of this broken trend line. A bit of a mouthful to get through. On top of that, we also had increasing volume on the following day, the sell side, and we really moved into the week over the weekend at least, suggesting that the market itself had a very good probability of continuing its next volatile move to the downside. We had a couple of targets over the weekend anyway as to where this market could move, but it really stemmed from that Thursday market recap which I made in regards to that Fed FOMC announcement which they made, in terms of in regards to their monetary policy stance. Since that date, we've been following a lot of trades, not only for that week, but also for a couple of weeks, if not a couple of months. And a lot are really materializing and are at least in their early formation of triggering and starting to move into profitable territory. Very, very exciting times if you are a swing trader, and if you follow me in that pro analysis class, or if you sort of just watch from a distance and you're sort of interested in technical analysis, as you'll see some form of, educational facility on this YouTube channel as we go through some of these stocks. But let me just go through a couple just to recap some of the beginnings of potentially the next little move. Here we are, we've got Walgreens, Boots, and Alliance. Two triggers here, 88.88 and 87.72. These were both bearish entries. These were going to be rollover trades when in fact this stock moved into our red little box right here. This is what we call a resistance box. When we have multiple areas of resistance on a chart, just like we have on the overall market indices. Right now, Walgreens, Boots, and Alliance has closed on Tuesday at $86.71. So we are slightly profitable. But in terms of risk and reward, we're not only slightly profitable, but we're $2 from our first entry, and we're about another $1 from our secondary entry. But in terms of where this Walgreens, Boots, and Alliance trade can move to, we're looking at a final target all the way down here at about $77.03, give or take a couple of pennies. Obviously, we've got an intermediate target down here, about $82.40. So just duplicate this target. And this is a really nice type of trade setup, which again, we've had to wait a little bit of time for. But when we start entering into these types of trades, we've got so many confirmational types of signals, it really makes these trades worthwhile. You can see also on the stochastics on this back test of overhead resistance, you can see very, very nicely the Stokes is starting to roll over. We've got confirmation on the MACD, and also the RSI is starting to turn down. So I really like this Walgreens, Boots, and Alliance trade. Outside of that, over the weekend, I also spoke in great detail about Boeing Airlines. A lot of information, a lot of emails regarding Boeing Airlines. I hope to answer the majority of them for you in this recording. But right now, once again, a very, very similar type of pattern. Dating back to the capitulation in mid to late August 2015, we understood that we were going to go through some form of a volatile type of period. Boeing Airlines doesn't really sort of encapsulate the volatility all too much, apart from this one particular candlestick here. But we were waiting for the next move higher, or the next wave higher, back into macro resistance, which would ultimately fail. We're starting to see the rollover again take place. Very similar type of candlestick on Boeing Airlines is what we saw on the overall market indices. NASDAQ, the Dow Jones, and the S&P 500. A very, very similar type of trade setup to that of Walgreens, Boots, and Alliance, which I've just covered. We were pushing back into the resistance box. We got the early reversal signal, a shooting star type of candle, or what in other terms we can sort of call a gravestone doji. It's somewhat between, it's a little bit of a hybrid. got a couple of spinning top candles, and over the weekend we were speaking about a 133.24 entry. Now today it has triggered. We do have what we call a hammer type of candlestick, but I am liking the rollover trade. 126 and 118.81. I am personally, once again, like I am in Walgreens Boots and Alliance, positioned in this trade. So I'm very, very excited for this. In terms of how overbought we are and moving back into resistance, it's all ticking all the boxes. Look at the Stokes, the RSI is tanking. MACD is still in bearish territory. We are going to get another cross, which assumes to be happening over the next week or so. So it's really liking the overbought nature. On top of that, we referenced the 100 and 200 once again, acting as resistance. And price is below all of the exponential moving averages. We are finding resistance at that declining 50 exponential again. So we're just going through the motions of what happens during a defined bearish trend. So I'm very excited for this. At the moment, it is down a couple of cents, but in terms of swing trading, we've got an incredible risk and reward on these two trades. These are only two trades which I am referencing right now, which I genuinely like, and I wanted to update you on. Outside of that, we've got Chevron again, really starting to coil. Pay attention to this. People in the class, follow along with the Bollinger Bands. It is setting up a squeeze, much like IBM. Again, it's calling down at the bottom. I went through in a great explanation as to which direction I would be picking or choosing to trade in terms of a trend with IBM. So that's another stock which we can all follow very, very closely with. Outside of that, we've got Caterpillar once again retesting these lows. Baidu also coiling to the downside, it appears as well. So pay attention to these Bollinger Bands. And also I've had a few inquiries at least about Apple and what to expect. Well, really to begin the week, or at least on a weekly chart to begin with, the net movement is down 5 cents. So, I mean, we haven't really done a whole lot in 2 days of trading. A lot of people are saying, look, there's a 2-day sort of bullish candlestick formation setting up an Apple, and it may very well have worked out to the upside. But at the same time, there's just so much overhead resistance on Apple in terms of risk and reward and how the trade is really starting to materialize. You really want to be paying attention to a potential break. This is a little bit of a bonus on this YouTube channel. Around 111.46. This is never a solicitation to do anything in terms of trading. This is just my own personal analysis, stepping through the stones, or at least the turns, of technical analysis and bringing you some interesting, at least, outlooks on what is going on with the markets and also individual trade setups. Outside of that, ladies and gentlemen, friends as well, we have, I'm just trying to bring up the right market here. We've got the Dow Jones Transportation Average really leading the market down. So although on the Dow Jones, the S&P and the Nasdaq, they were relatively bullish, we didn't have as so much of a long day type of Morobozu candlestick. This is really a continuation signal, again stemming from that shooting star candle, which I did go through on that Thursday market recap. It really appears that we're either going to come down to 7,700 on the transports, even as low as about 7,480. Ultimately, from this level, I am expecting at least one more retest of macro resistance, more so on the industrials, up into this red box, which a lot of people will sort of say, well, look, we've established a little higher high and maybe even a higher low in terms of what we did in August. This is somewhat of an intermediate wave setup, which will probably and very likely turn over up in this red box. So really right now, again, we're just battling with volatility. We're just buying time until we get into these macro types of areas. But right now, I am really struggling to position myself long on this market or have any open long positions. At the moment, I'm net bearish. Made that very, very open with a lot of, with some at least selected trades, which I've just walked through. And I just wanted to bring that to your attention. All right, so that is a Tuesday afternoon market recap. Again, the first one since Thursday, but these are very, very important signals which I cover when I do these updates. And I want you to understand that when we get through these types of periods, it's hard to understand which direction the market wants to know. All we can really gather is that, hey, look, volatility is going to linger around for a little bit until we get a definitive signal. That definitive signal was on Thursday. As it stands on Tuesday afternoon, it really looks as though all of these markets at least are going to, or appear to be, continuing to the downside, if not setting up the beginning of a little bit of a volatile move down to old support levels. That should round out very nicely with individual trades which we're following, and we should be looking, or at least be very happy by week's end. Traders and friends all around the world, it is James signing off on behalf of Pivot Point Trading. Have a lovely evening. I'll be back with you at some stage during this week, maybe even tomorrow or Thursday, depending on how the market sets up and how it continues. But just be careful out there if you're holding longs or if you have open short-term positions to the upside. You may have to pay the price for those open positions if you do not understand directional movements or how to break down technical analysis in the current marketplace. All the best, traders and friends. It's James signing out on behalf of Pivot Point Trading. Goodbye.